Hello everyone. Well, it's a risk-on kind of day today, and the dollar is slightly higher against most G10 currencies this morning. It gained most against the yen. Is dollar-yen up because Japanese stocks are up, or are stocks up because of dollar-yen? Perhaps both were up because in anticipation of Bank of Japan Governor Kuroda's participation at the Fed's Jackson Hole seminar tomorrow. Or perhaps it's just part of the general risk-on sentiment that may be encouraging yen-funded carry trades. The change in sentiment was caused by yesterday's announcement of an improvement in purchasing managers' indices worldwide, starting with China and then moving on to the Eurozone and the US. That's gone some way towards countering the fears of tapering. The Fed's latest survey on tapering shows that primary dealers expect the Fed to reduce the pace of its asset purchases in September by $15 billion to $70 billion a month, falling to $45 billion a month in December, and then ending entirely in June of next year. This implies that professional investors have now fully discounted tapering. Bloomberg noted that outflows from bond funds in August, as of the 19th of August, were already the third largest on record, as the retail market, too, is positioning itself accordingly. Now, the dollar's gains followed a continued decline in the 4-week moving average for jobless claims yesterday and a further rise in Fed funds expectations to a new cyclical high. The big story overnight, though, wasn't the dollar or the largely stagnant euro, but rather the rebound in emerging market currencies. Despite that dollar-positive news, all of the 15 emerging market currencies that we track were up against the dollar, led by the Mexican peso, up 2.1%, the South African rand, up 1.5%. Even the beleaguered Indonesian rupiah was up 1.2%. I think the rise in the PMIs and renewed hopes for the global economy have dampened the sell emerging market frenzy, for the time being at least. There's no major data out today. The only U.S. figure is new home sales for July. So without much of an external impetus, I'd expect people to trade watching the technicals. For euro-dollar, that suggests a 133 the figure, 134 the figure range. For dollar-yen, the pair completed an inverse head and shoulders reversal formation yesterday and broke above the 98.56 level. If the bulls are strong enough to maintain that momentum, I expect them to lead the pair towards the psychological resistance level of 100 the figure. This is Marshall Gittler, Global Head of FX Strategy at IronFX, wishing you solid trading.